Hi, and welcome to the Market Alert for Thursday, the 23rd of February 2023. So bonds and dollar bid as Fed minutes spark sell-off in stocks and golds, so ramping the dollar once more. Stocks and bonds off highs after hawkish leaning in the FOMC minutes. And US stocks unwound and finished mixed post FOMC minutes there as well. US stocks closed mixed and unwound earlier strength after the hawkish tidbits from the state FOMC minutes were seized upon by market participants, in which there was plenty of attention on the comment that a few participants favoured a 50 basis point hike. I mentioned this the other day, that given the inflationary data of the last few weeks, or hot data as it's called, then they can't really consider a 25 basis point rise. But again, it's out of our control. We'll just have to wait and see what happens when we get closer to the next rate hike. And finally, the war drums of Biden. And this headline says it all. We've heard this all before. This particular word here, freedom. Freedom is at stake in a NATO meeting as proud Putin holds huge rally, war latest according to Sky News. But how many times have we heard this with Iraq, Afghanistan, etc., etc.? So it just makes you wonder what's coming down the line, doesn't it, when you start to see headlines like this and all of them gathering. And as the economic news there, well, it's not economic news, the G20 meeting, second day, so be prepared for more of the war mongering and banging of the war drums. Other economic news, prelim GDP quarter on quarter for the US, forecast at 2.9, see what it comes out as when they release it. Anyway, let's have a look at yesterday's markets. We'll kick off with the Dow and work our way through to the metals as we normally do. And in the Dow for yesterday, we can see that the market traded down to the support to the left there. And then, let me just change the colour from there to there. And then we can see that the market is up overnight as well. And also note that the volume is more or less the same as the previous day, and therefore indicates that there was some selling found in this market towards the end of the trading session, as prices also came off the low, which can be seen there as well. Let me just zoom that in a bit so you can see what I'm driving at. In fact, the volume is actually greater, isn't it? Let me just have a quick look. 88,237. Yeah, so we do actually have demand there at the end of yesterday's trading session. If we look at the 30-minute chart, you'll see the cluster of volume there as the market puts the brakes on and then reverses, and you can see prices coming back up there, currently above the DP and the close and the 20 bar and the 5 now in the 30 minutes. Got the 50 EMA above it, and then you've got yesterday's high as well within the gun sight there as well to move prices back to the upside, sort of further closer to the high than the low as the DP implies, because obviously that's the sort of the center point as it were. So yeah, the high looks like it's going to be in favor first of all during today's trading session, and those GDP numbers are not out until 1:30, isn't it? Let me just double check that just to be sure. 1:30, yeah, prelim GDP. So yeah, that's the Dow 30-minute chart. As I say, sell-off came. We moved up initially, and then, like I say, the FOMC minutes and the prospect of 0.5% rate rise sent the market lower, along with moving the dollar to the upside. In the German DAX, also lots of frenzied buying yesterday. Came mid-morning, market retracing off that double bottom as well, and up on the overnight above the 50% there, and just above the 5 MA. Got the 62, 78 and 89 as we head back towards those highs. In the 30-minute chart, we started off with some aggressive selling. We stayed like that for a good couple of hours, and then eventually we retested, and with the momentum starting to move to the upside, and that's where we headed. And even the FOMC meeting minutes really didn't have much of an impact. The market coming back to the previous day's close. I think that's the close there. Yes, it will be, because it's the DP is there. DP and close. and then moving up, and at the moment trading above yesterday's high and holding above there. If you have a look at the 5-minute chart, you can see that they've already bought into the high there. That doesn't mean to say it's going to hold. They could shake down to the close and then bring the market back, but if they can't blast off from the high at the start, then they'll have a shakeout, as they've done so many times before, and then bring the market back up to it. That's the way it generally plays, unless the speculation of this rate rise plays heavily on the market and prices continue lower. But at the moment, you can see they were desperate yesterday to bring the market back in both the DAX and the Dow with that demand. In the implied volatility yesterday, we've got 1691, so down from the 1720 the day before. Again, that's indicating also that the risk seems to be off. And despite the fact of the FOMC volatility, I was quite surprised to see this down. It's not down a lot, of course, but it is down nonetheless. In the S&P also, we have demand for yesterday as well. Down at the 89% retracement, needs to get back above the 50, the 5 and the 20 MA there in order to move higher. Let me just draw this in for you. So we've got the 38, 50, 62, 78 and 89 on the upside there, should the market make a move back. Yesterday, choppy for the S&P. We were down, then we were up, and then we went back down. As can be seen there, we found support, and then back up again until we had the FOMC, and then back down. So a whipsaw day for the S&P, coming off the S1 though, and more directional overnight, above the DP, above the close, above the 20 and the 50 EMA there as well, and just trying to head back towards yesterday's high. In the FTSE 100, also some buying coming into this market. I know there is, because it came off the low of the bar, but overnight the market gapping down a bit, and then it can be seen there, gapping down and then moving back up, filling the gap on the overnight there. Just above the market at the moment is the DP and the 50 EMA, which need to be taken out as well. In the GBP JPY, we've got some selling for yesterday at the 200 MA. We need to drive through this with buying in order to continue the move to the upside. So far in the major swing there, we've got 62% above this area, and then obviously the 78 and 89. So at the moment we're sitting at around that 62 level, which could be a bit of an interesting one as well. So like I say, it's going to have to drive through this area. Yesterday we saw some weakness. I say we saw the supply in the market. Price is down just over 100 pips, and then moving back to the upside and just sitting above the close at the moment. Bit of buying coming in there at the moment. In the pound, this obviously down yesterday when the dollar went up, and overnight a dollar down, and the pound moving back to the upside there, stuck in a bit of a sideways range. We were down to the DP, and then we moved the market back, retracement back to the close, and then back down following the FOMC meeting minutes. Support at the 200 MA, as can be seen there, we've got some divergence as well, and the market moving up towards the DP overnight. And in the US dollar, yesterday moving up on the news, and overnight down. Just a quick look at the 30-minute chart, and there you'll see the market's reaction to the Fed minutes having to increase rates further. That strengthens the currency in theory, and overnight it looks like it's being discounted, but more or less back to where the market took off from with the US dollar. So just that spurt to the upside was enough to bring about selling pressure in the metals as well, which we'll have a look at now. So kicking off with silver, market down yesterday. As I said, they would take out the low for yesterday, and no doubts they'll probably do the same later on today. You get the bounce overnight because you haven't got the LBMA and JP Morgan participating in keeping the short side going in this market. So you get the reprieve, and then you get the hammering. So watch the low at 2140 later. We've got the DP there as well, and the 50 and the 200 MA. You can see how yesterday it was a resistance area as the market broke through and then sent lower. In gold, also down yesterday afternoon as well, or evening. Was again moving up till the LBMA and then the Fed, and then overnight it's been able to move back there just above the DP, moving up quite strongly there. So compared to the silver market, if we look at the gold silver ratio, you will see that we're up yesterday for this, and 84, not 84, yeah, 84, yeah, around the 85 level. Overnight, silver doing it a bit better than gold as far as regaining some ground there, according to the gold-silver ratio. Okay, that's it for this one. Let's see what those GDP numbers are at lunchtime. The market's got to make its own direction. Watch out for more warmongering from Biden. And let's see how the market reacts. Okay, that's it. As ever, thanks for watching. See you.